All right. Now, it makes sense now that you have health. It wasn't that easy for some of us because going through the downturns is not a fun thing, especially when you have so much expectations on a stock like AMC to short squeeze and bring you to the moon, literally to be richer than you ever think it will be possible to be rich with one single stock in the stock market. All right. So because of that, now that we have a little bit of momentum building back up, it is good for the mindset and the psychology of people because maybe you don't haven't realized it, but I think you have if you've been holding on AMC. Psychology or the psychology of an investor in the stock market plays a lot in how you handle your investments, your positions, the money, the ups and the downs. Now, it is true that we have a momentum building back up because not only AMC gain, not only GameStop gain, not only KOSS gains, but the market as a whole seems also to kind of show signs of an uptrend. Now, nobody knows exactly if we'll find that the new highs that we've hit back to January because we still have some little risk in the market that may be lingering towards the second half of the year. But I don't want to, even though things are looking good, especially for this coming week and maybe next week, I don't want you to get too much excited. I'm going to share with you two main things or two main reasons why, I think we should be cautious. Why? Because first of all, it is true that there are reasons to be really excited. All right. The first thing is AMC, GameStop, KOSS. You can see GameStop today, jumped. But look at the volume. The volume was really, really low. For just this low volume be behind these stocks gaining that much if it's not shorts covering. But the thing is, we knew that the shorts were supposed to cover at some point because the short interest, even though it is not the accurate one, the most realistic and real data that we're receiving from platform like Ortex, we knew that they were already very, very, very high, even getting the data from these platforms, all right? Meaning that if you add that to the utilization rate, which was already at 100% for 1 month now, it was just a matter of when the pop will come. Now, the pop, and I'm talking about a pop, I'm not talking about the big short squeeze. I'm talking about these gamma squeezes or short squeezes or little shorts covering maybe part of their positions. All right. Now, this has the potential to actually go even higher. And I mentioned that in the previous video that I posted today. But even looking at the street, they posted an article 1 hour ago talking about GameStop potentially reliving or being on the pattern or being set up to actually rally it did rally last year in 2021, reaching $300 per share. Well, could this be the beginning of another melt-your-face rally? Will traders and investors revisit the golden days of 2021 when GameStop skyrocketed to mind-blowing peaks of over $300 per share? And, they go over the reasons why this might actually be the thing. But there is a point behind this, all right? There is a point behind this. And the point is, well, if you take into consideration what? The chase pumpers, all right, the day traders, the swing traders. If you take into consideration the psychology of every holders here in AMC, not losing hope, all right, not losing hope and actually giving them a sense of, well, it pays to be holding a stock you have to have conviction in because nothing can go down indefinitely, and it's a matter of cycle. If you hold in between those cycles, then you end up being on the top at the very end, but we are not at the very end here. All right. So if you took all these factors into combination, of course, the option also play, the option chains getting closer and closer to a higher price point may actually get us closer to another gamma squeeze in the next coming days. But for that, the share price will have to hold even if we continue to gain significantly in the next coming days. And that is where I think we should be cautious. Why? Because first of all, we know that on low volume day like this wasn't the result of people buying. We've been buying for the last year. We've bought so much that people are not even caring if they are bleeding their savings account or if they're going into debt to buy. That being said, we also know that most of the trades here are being done and are going under the dark pools. All right. So the volume on the dark pools is still above 63 or 64%. That is huge. That is huge. All right. Now, that means, or that tells me that, well, because they control, for now, they control the share price through those dark pools, if the short covering is continuing tomorrow, which by looking at the after hour session today, or maybe looking at the trading session today, and definitely on Friday, because Friday is the closing option day, well, we will have a pretty good indication if this is squeeze time beginning. But until then, we have to be cautious because they can turn on and off. They can turn on and off. It's like, the algos are coded to make sure the share price is maintained in a given range. We've been seeing this many times over the last 12, 13, 14 months. So it might be another tactic to get people hopes up so that we can flow money back into the options, even though we already know that we've been washed over and over and over again. But still, people like to chase the pump. People like to make money. All right. So it might be another trick by the market makers, which also can be on the short sell side to actually attract some buying pressure here. And by Friday, boom, we can get caught up and pull rock or rock pulled. And then that's how people will lose all the money that they put into the option chain again. So I might be wrong, and I would love to be wrong. But I mean, by being realistic, based on the past action we've been seeing here, it's too early for me to be that much excited. Now, if we gained $20 or $25 today, then maybe I will start to be excited. But again, I would love to be wrong, but hey, you have to be prepared for both scenarios, the good one and also be prepared for the worst one. That's how you gain. That's how you win.